Welcome to Momentum Monday. Today is December 18, 2022. Howard, did you watch the World Cup final?
Yeah, what a game. I didn't, yes, it was fantastic. I didn't realize so many penalty shots in just general in games, Just probably the most soccer I've watched
Yeah, it's good.
football.
Incredible game, definitely one of the best. I only
Yeah,
watched like the last 30,
it was
40
just
minutes.
two incredible teams, very deep. I think the Mbappe kid is just a couple of just the way he can gracefully at speed move his body. But like all athletes, just incredible to watch. And I don't know how I feel about penalty shots, but the goal, it is interesting to watch how you can tell how great a goalie is by like saving one or two of those. It's just incredible. So it's pretty interesting. But yeah, I wasn't rooting for anybody specifically, but it was cool. It was cool. Were you rooting for Argentina or for France?
No, but congratulations to Argentina. But I'm just a fan of the game, I guess. I just don't. It didn't
It
matter
was
to
a
me
pretty
who
good
wins.
game, right? Like I don't watch too much, but like it was.
Yeah,
Would you consider that one of the better games you've seen?
probably one of the best games. Yeah, I mean, as I said, I only watched like the last 30 minutes in the penalties because I was in the gym and it was pretty good. Yeah,
You took it so seriously, you went to the gym.
I mean, I don't have a TV at home, so that was the only place to watch it. So
That's why you
better,
look so
but
young.
yeah,
I haven't had a TV on in 1,000 years, but I do watch a lot of streaming. The All right, walk me through
yeah. I
this
mean, so
mess.
basically, the everything is still in a downtrend.
Yep.
As you can see, the S&P and the Qs and the IWM, which is Russell 2000, they continue to make lower highs. And
Yeah.
last week, like for the third time, they kind of tested their declining 50-week. I mean, this is the 200 days, so you don't see the 50-week, but every single time it's been finding resistance right at the 50-week moving average. So it will be interesting. I mean, I think the bullish scenarios here is just going sideways in a choppy range
Yeah.
and then eventually building a base. And the bearish scenario is obviously another leg lower.
Yeah.
Since the Fed raised the interest rates by only 50 points, everyone expected that. What many people did not expect that
Yeah.
the majority of the Federal Reserve members expect interest rates to stay above 5 for the entire 2023. This is what basically led to the sell-off on Wednesday, and we kind of saw follow through on Thursday, Friday. So inflation, fighting against inflation continues to be their main concern, and the market being a forward-looking mechanism is worried that the Fed might be behind the curve again, and their action might cause a recession at some point in 2023.
Yeah, I mean, listen, I talked to my nephew works I've just talked to all the headhunters firms, the big recruiting firms in tech. Tech is really, whether it's even Israel, I have friends, talked to a lot of parents whose kids moved there, and it's going to be messy. In tech, the question that I keep asking is that's too obvious, right? Like, where does this spread? Does this spread to consumer and retail, right? Apple breaking down relative.
Yeah, definitely. Apple,
Yeah, so that's
Amazon
the consumer. You don't
breaking
even have to
down.
call it a tech company. That's like modern Disney, right?
Yeah.
That's like, and I don't know how you can own. I've been low stocks all year, but like I just this outside week is
It's a
ugly.
miracle that
That
the
volume
S&P,
too.
yeah, the S&P
Um,
is only down 20, right? Considering the damage, it's a miracle, I think.
Well, that's what I'm saying. Does this spread, home builders does this spread to real estate, right? You had the Blackstone fund kind of shut daily withdrawals on some 70 billion liquid real estate fund, right? Obviously in their prospectus, I think it's BX, but obviously in their prospectus, unlike FTX, that's a big fall, right? Like where did that close? So there's a run on Blackstone in many ways, right? They're the
all the
I mean,
financials have been
it's
hit
the
lately.
legitimate FTX, as you would say, like they're the blue bloods of. So going back to Blackstone, I mean, I think a lot of smart friends of mine, like I don't have the capital to put in those type of ridiculous things, and I don't think I'd fall for it. You know, if you want safety, there's T-bills for now. Whatever, as long as government in the U.S. dollar exists, U.S. government in the U.S. dollar exists. I think the big thing this week, Ivan, is does this spread? And it's over my pay grade, right? Tech is
Does it
completely
spread
dead.
to energy? Yeah.
All the momentum trend following funds, all the crossover funds are short software, right? I read enough quarterly letters and have enough access to people. It took them a while to like get religion, but you know, forgetting them being short, the fact is, what's the catalyst for them to get long, right? Salesforce trading at 10 times.
Yeah.
Salesforce cost of customer acquisition is 10-year payback right now. I mean, they're not going to hire. They need to cut marketing. This is the worst it's ever been for Salesforce at a time where people are working from home, products bloated. They need to keep the pump prime. Go back to a monthly on this Salesforce. This is like there's a lot of room for that to come down now that the trend is broken, right? Like, and what's the market cap on this? 120 billion. This is not $120 billion.
130. Yeah.
Yeah. And so, you know, I don't know how you. So now it's just a question of spreading. So then I look at Blackstone and Goldman, and for a sign, and Apple, and they don't look great. You know, Blackstone, Goldman looks the best. Apple looks like it's rolling over.
They do. They do.
Yeah.
Apple seems in trouble. They've been cutting
And then
their
energy
guidance.
looks like it's in trouble.
I mean, if we really enter recession, anything commodity related is just gonna get slaughtered.
And that's the thing, like bonds and stocks finally started diverging, right? Which means, you know, stocks go down and bonds will go up finally. Like that trend could be reversed. That ARB could be finally going back to normal, meaning, you know, people like myself rushing to bonds as I get older, and safety and surety of 4 or 5%, or even in some first deeds 8%. And it takes a lot of, so there's a lot of people just, it's not so much that stocks might stop going down, it's what's the catalyst for them to go up. And I'm not a good enough trader to like trade off that sentiment data, nor do I have the time or energy to try and grind that out at this point, right? So I'm in like sales mode, finding out where the damage is and the bodies are buried, helping our company.
Are you selling for tax reasons, or you've already done
that? I did that a while ago. Right? Like anything I have left is, you know, I'm trying to just, you know, figure out. I just don't own enough individual stocks to care. And now I've hit the age where I do kind of believe in ETF investing, but it coincides in a vicious, you know, bear market. We could argue about bear market or the terminology, but this is vicious. And the Nasdaq's at a 13-year trend line. So if we pull up, you know, the Nasdaq,
this is the Nasdaq 100. I mean, kind of like, bounced near its. This is
like as painful as this has been. We're still in an uptrend.
I mean, this is a monthly. Obviously, this is a very long term.
So we're in an uptrend that began with rates being cut in a zero interest rate world for the last 15 years. It's very hard for me to believe. Again, I hope I'm wrong. It's very hard for me to believe that this doesn't get much worse for tech. It doesn't mean we can't bounce 50%. It's just very hard for me to believe, especially because tech is dominated by like 5 companies, the law of large numbers. Yeah. But it's still a great time to be a consumer. Like if you're a consumer, there's like, I was reading Ohm's blog, Ivan, and there's like, you know, all kinds of great products being created, whether it's in, you know, internet products, you know, and there's still a million ways to skin a cat. So it's like, we just may live in a world where stocks are just not going up, and people have to figure out how to make a living or or build wealth, you know, as good traders like you've done through a few markets, or as like focusing on their business and you know, building a great business. What are you seeing? Is there anything working other than like maybe silver and
I
restaurants?
mean, you have to be nimble, and obviously the past few days, almost anything on the short side has been working. So I'm dabbling here and there with just short-term options, just buying premium puts because I want to limit my risk. I know that every time I buy short-term put options or call options, my risk is the entire premium. So I want to make sure that, you know, I know exactly upfront how much I have at risk, so I don't have some overnight surprises.
Yeah.
So on the short side, almost anything after the post FOMC sell-off. But before that, we had quite a few bounces. I mean, China basically doubled since that huge gap down in October. A lot of those stocks doubled, and also semis are up 60-70%. So even in a bear market, you have those little moments that last a couple months where you see some humongous bounces that if you are a nimble trader that you can play. So definitely plenty of opportunities for short-term trader, more so intraday than swing, but even for some swing, if you're able to adjust, even in software, Howard, like a lot of them are kind of gapped up on earnings. And it kind of went sideways, tight range, so you can enter for a swing for a few days here. So a lot of them kind of have been trading the same. Obviously, these are not long-term investments.
Right, but is anything, forgetting soft, like, does anything look interesting? Or you just, the biotech was looking
It just depends on the time frame. I mean, yes, biotech still looks the most interesting. The biotech still has the most interesting individual setups, but in any given biotech stock, I mean, I don't know their story. I don't want to wake up
no.
with a
And they're
50%
still
gap.
They're not earnings plays. It just, that speculation needs to be rid. I think looking at Apple this week, watching Tesla, Musk is saying,
Tesla completely
I think Musk has
destroyed.
already picked somebody. I mean, he's being yelled at so much, forgetting the Twitter noise, which is fun for me, but like the Tesla is real. Like, this isn't a joke. And his shareholders are screaming. And technically this is a mess. You know, he's out there on Twitter saying, you know, blaming the Fed, which is, you know, which is what I would probably do. And
I mean, considering
the you know, he was a big benefactor of being early to EV, and it ain't going away. So he needs to focus on that. So watching Tesla, Apple, and then just to see
any of the big ones, really.
Watching just watching to see how this Blackstone thing plays out.
I mean, definitely could be a big factor. It's a huge company, and a lot of people made fortunes in Tesla during that huge run from December 2019 to November 2021. And a lot of people were like super leveraged, having their entire account on margin, having long-term co-options.
I mean, look at the GME chart. That's breaking too. Like,
and this is one of the reasons now.
Compared to Tesla?
Which one?
Look at GME, like it did the same thing during that time. Like,
I mean,
so that's the same thing, right? You had the
on a smaller scale, I mean, much smaller.
I understand, but no, on a bigger scale. I mean, that went from pennies to 100, so it's actually on a bigger scale. But if you just take out the steepness, it's the exact same chart, right? That was just, you know, retail.
I mean, it's looking better than Tesla. It's still above its 50 months.
It's a goner. So, let's be honest, it's a goner.
Oh, absolutely,
it's a goner. There you go. It's a goner. So you still have this rampant speculation. It's not like Tesla's cheap. He's been selling his own stock. I doubt it's to pay for Twitter. It's just getting his leverage down personally, because he's not an idiot. He himself understands rates and the fact that there's choices now with the Fed raising rate. It's going to be hard to get people to buy out on his risk spectrum, and no one.
These are expensive cars. Not everyone can afford them.
I mean, Porsche's half the price. So So there are problems. This is the stock to watch. Everything at Twitter is kind of a sideshow. He's already picked someone to run Twitter. It's obvious. He's out doing a poll, which means he ain't giving that to chance. So he's already picked somebody in case the public votes. And I think his shareholders are right. Like he's got a $500 billion company that was a $1 trillion company. Focus, because even if he's the next Steve Jobs, he's got a lot of work to do. So I'm hands in pockets still. It's I got my lessons learned in March. I think if you're not, unless you got someone like you in the side pocket that can like really dig on a daily basis, it's too tough. I can't believe how hard it is. I don't see any.
Eventually, it's going to end, though, Howard, because we've been in the
eventually. So you got to have cash. You've got
you need to have capital, to take advantage.
You need to protect your capital here because if we're near the end, great. But if we're not near the end, you're going to appreciate, even being down 30-40% on the year, you're going to appreciate. Look what Cathie Wood's doing, which is reckless. I mean, this looks like it could a zero.
I think it went below the
this is below lows. March 20s numbers. This is what active management, or basically no management, can do, right? We were all Cathie Woods. Okay, there's no denying it was fun, but you have to protect some of that. She's given everything back, and if you don't think this can happen to you, you're crazy.
I don't think she's given anything back, Howard. She's just getting paid like what, 1%?
Oh no, she's getting paid her
1.5%.
If you believed in the momentum, this is what happens when it unwinds.
Her clients have given back everything. She's still making $100 million a year or more. So she's smart.
This is a
marketer.
It's a pretty big tragedy. But this one will go back like CMGI and Internet Capital Group. She's the poster child for this bubble. Just running from one story to the next, and now she's trapped in all of them: genomics, Tesla,
Zoom. These are some of her biggest positions, like
Coinbase.
We
all have these mistakes, but you have to have some.
Might be one that has some chance. We'll see if they build a new base here.
Yeah, but she can't possibly do all this research across this many industries. That was the joke of it. She's a pure momentum investor, which is great. I'm a momentum investor, which is why you have haircuts at the end of a bull market. You lose 30%, 40%. But being down 70 with no plan means she's going to have to gamble more. So I hope people kind of separate the difference between if you take a lot of risk, going to have 30% drawdowns. You just are. And that's a lesson of this, bull market. But you've got to, at some point, have a plan and reevaluate. And generally down 25, 30, you've got to rethink how you're thinking about stuff. So anyways, good work, Ivan. Sorry I missed last week. And you got plans for Christmas?
I'll be staying here this year, so nothing big.
I'll be there beginning of the year. Have a great Christmas.
All right, you too, Howard.
We'll see everybody next week. Be careful. This would be an interesting week. So
all right.
How are you positioned coming into the week?
A little bit short via some put options, but mostly cash.
Yep. Okay. Have good luck this week, everybody. Have a good week.
All right.